Okay, it is Friday, June 1st, 2018. This is going to be a quick update and wrap up on the last few hours of trading here. So it's non-farm payrolls today. And earlier in the week, we had some continuation breakout trades. You might remember here the dollar index, the daily. Earlier in the week, I was talking about how it was reaching this resistance point. This was actually on Tuesday, and then I was sort of translating a lot of that information from the daily chart to the 1 hour time frame, watching Japanese yen futures. I'll show you those in just a moment. And then sort of correlating everything and lining it all up together with extension levels. For example, there were some extreme levels there on the euro yen, the pound yen. The pound had found some support. The euro dollar found some support. So let's go ahead and take a look at that, and I'll just sort of refresh your memory here. And we're going to go over here to the daily time frame. And you'll remember earlier in the week we had this support level there. That was that extension target. I talked about this quite a bit. This is the daily time frame for the euro dollar. So this is just to give you an idea of what I'm doing, how I trade. So I do look at the 4 hour and the daily charts, but I'm not necessarily executing a trade based on those time frames with the trade copier. With the trade copier service, you're primarily getting my day trades. What I'm doing is I'm hoping or anticipating or expecting that when I get into the trade, the trade will reach its profitability, its potential take profit level within the same trading session, sometimes just within the same trading day. Occasionally, I might have to hold onto the trade for, let's say, 9 hours, 12 hours, 18 hours, 24 hours. It happens. It could be, again, with the expectation of economic data, political events, elections, holiday seasons. There's many different things and reasons why price goes inside a consolidation. So that would be some of the reasons why, when you get into a trade, sometimes you can't control the behavior and it just stalls. You just have to hold on to it. But primarily, again, I am getting into the trades and getting out of the trades within a few hours. That's what happened on Tuesday with the continuation breakout trades. But when I was done with those continuation breakout trades on Tuesday, I stopped because I could see these major support and resistance levels. So here on the euro dollar daily time frame, that's that major extension target. That's the last target. That was the last extension target here based on this consolidation that went and continued from February all the way until late April when it finally broke out and then dropped, and here we are bouncing around at like the very, very end of May. Again, it correlated with what I was seeing here with the dollar index. The dollar index, again, rallying up there. This is Friday, there's Thursday, Wednesday, Tuesday, and Monday. So again, it was just hitting that resistance and pulling back away. That's what was giving me the opportunity to get into the continuation breakout trades, but then set my expectations, right? I don't want to hold on to these trades for too long. I want to make sure I lock in profits. That's what I did on Tuesday. And then I was done and pulled out of the market, and I was no longer going to open up any other positions. I knew I was done for the day. Things were going to go sideways and flat, which they did on Tuesday right after we had closed those positions again. And then the same thing was going on with the Japanese yen futures and watching volume levels. Same thing. So let's go back over here to what happened today with non-farm payrolls. So if I go back over here, we'll start off with the euro dollar. I didn't trade the euro dollar at all. The euro dollar has been inside of this consolidation range for the last couple of days. This is the 1 hour time frame, and this dotted line right here marks the start of a new week. So I want to pay attention to a few things. In my opinion, the way I personally trade it, to me, this week's high and this week's low is very important. Doesn't always have an impact, but I always want to be aware of where it is because it can sometimes have an impact, which is what I'm going to show you on another currency pair in just a moment. This one did not give me an opportunity to really trade it. I saw the reversal there, but I wasn't too sure. When I see consolidation, but I see a reversal candle pattern like this inside of consolidation, I don't know that the reversal candle pattern indicates always that it's immediately just going to take out that support level. It doesn't. It does not mean that. It could turn around and go right back up again and then close above resistance. So the safest bet to me, the way I trade it, is to wait for the continuation breakout trade. And the continuation breakout trade requires me to identify a clear range of consolidation. It has to be a specific range from the high to the low. And then I wait for a 1 hour candle to close outside of that range. And if a 1 hour candle does not close outside of that range, then basically I do nothing. I don't anticipate or expect any kind of trending behavior in this particular currency pair. And that's exactly what we saw. We really didn't see much of a trend today. We saw a spike, pullback. That was at 10 a.m. New York time. Non-farm payrolls obviously back up over here. And the only other way to trade would have been off of non-farm payrolls itself, the release of the number, getting in the split second. Now, if you're going to use my trade copier service, you're probably interested in whether or not I trade the news, and if I jump in the split second I hear the numbers on economic data. And my answer is no, I don't. I used to do that. I used to do that many, many years ago when I traded my own account. I was scalping. I was doing a lot of different things. But it's very difficult to do with a lot of consistency, especially if you're not using a very reliable broker. And the reality is that if you're using my trade copier, while my platform might be pretty stable and I'm seeing consistent pip spreads and I'm not seeing the price freeze up or anything like that, many of my subscribers are using many different brokers, and I have no idea what's going on with those brokers on their platform. So it would be irresponsible for me to try and execute a trade just because I see clear numbers after non-farm payrolls and I know what to do, but I don't see what you see on your platform. It could be that your broker may freeze the price feed, may widen the spread to like 9 or 10 or 17 pips on the euro dollar. All kinds of things have happened, and we've seen it all, and I've recorded it all. So it's better for me to wait. So again, that's why I fall back on that continuation breakout trade. The continuation breakout trade after non-farm payrolls, let's just say, for example, if non-farm payrolls was actually to create a breakout on this pair, the non-farm payrolls comes out at 8:30 New York time. So from 8:30 to 9 o'clock, I still have to wait for that 1 hour candle to close. I have 30 minutes to analyze the data, and there's also 30 minutes of time that passes for the pip spread to normalize. Things become a little more equalized in the trading platform. It's less likely that you're going to see price freeze up in your platform. There's less of an opportunity that there's going to, or we will experience, broker manipulation. Brokers can, for the most part, play around with what you see to frustrate traders, and I'm not saying that all brokers do it, but some still do, and they cause a lot of pressure, unnecessary pressure and frustration for a lot of new traders that don't know what it is that they see, and they don't know how to handle it, and they just close out the position with a loss. It still happens today. It doesn't happen with all brokers again, and the continuation breakout trade is one way that I can minimize all of that. And we stay away from getting involved in, again, trying to jump in the split second economic data is released. I'm listening to it. I love it. I like listening to it and watching the reaction, but I'm certainly not going to get in. It's just not worth trying to risk as much money as I trade, as much money as I put on my trades or your trades. If I'm trading for you through the trade copier, it's not worth it. It's just not worth risking that in that type of risky behavior. So again, no trades here on the euro dollar. There just wasn't a continuation breakout trade. Now, the continuation breakout trade is not the only technique that I use. I do have a Tech 1 trade, which allows me to trade reversals inside of consolidation. I have an HL30, which allows me to trade inside of consolidation, but I really didn't get those opportunities to trade that here. When you start seeing consolidation that lasts for a long time, you don't know how far a candle pattern like this would push price. And then with the anticipation, again, either after or before economic data, well, it's probably better to just wait for the breakout or go look at another currency pair. That's how I look at it. If I don't see anything that makes any sense here to me at that time on this particular currency pair, I'm not going to force it. I'm just going to go look at another currency pair because chances are there's an opportunity there. That's exactly what we got here with the dollar yen. So the dollar yen printed a continuation signal candle at about 10 o'clock New York time, Thursday night. New York time, 10 o'clock. So there was a few things that were going on with this particular continuation breakout trade. I'm not going to use this recording as a full educational tutorial on how to execute the continuation breakout trade, but I am going to give you some specifics about why I do what I do. So I mentioned that the continuation breakout trade is accurate 90 to 95% of the time. Again, there's going to be some times when the market will do whatever it does for whatever reason. It happens to every trader. Every trader on the planet experiences this, where it just doesn't work out the way you think it's going to work, right? I mean, you can have a solidified trading plan, but you still have to allow for some flexibility for those moments and those times when the market does what it wants to do and you cannot control it. Happens to every single trader. Every trader. It doesn't matter at what level they're trading, it happens to every trader. It just happens. So you have to be prepared for making adjustments along the way and analyzing things along the way and managing the trade as you get into the trade, or as you watch the trade move around and more data hits the market and how traders react to it, what's going on, right? Maybe things that you sort of missed or weren't as clear in the beginning are a little more obvious a little bit later on. Things can happen. Just everything can happen. Anything can happen. So with the continuation breakout trade, I primarily use that technique again on the 1 hour chart. I do look for the continuation breakout trade as confirmation on the 4 hour chart and the daily chart. So very often, if I get a continuation breakout trade here on the 1 hour chart for the dollar yen, later on after I see all of this, right, the entry, the stop loss, the take profits, all that, later on, with time, I also want to switch to the 4 hour chart to make sure that the 4 hour chart eventually prints another continuation breakout trade, solidifying my belief in that the trend is probably going to continue and it's going to reach that take profit level. And I'm okay and I'm doing the right thing. And excuse me. And then at the end of the day, I want to go back and look at the daily chart to see if the daily chart has printed a continuation signal candle. So you can see how in steps, it starts with the 1 hour chart, then I go to the 4 hour chart, then I go to the daily chart. And sometimes if all of that lines up, because it does on occasion, doesn't happen all the time, but it does, then I can hold on to these trades a lot longer, even though I get into them on the 1 hour time frame. Sometimes I do that. I don't get to do that all the time because the market doesn't provide that opportunity all the time. But there were a few things that were going on here today, and I want to talk about that. Why this one was a little bit different. So with this continuation breakout trade that's set up at 10 o'clock New York time PM on Thursday, and I talked about this, and I talk about this often, especially as we head into non-farm payrolls. Sometimes we get the opportunity to trade before. So I get a continuation breakout trade on Thursday during the Asian session before non-farm payrolls, and sometimes it'll reach that 55 pip take profit target before non-farm payrolls is released. That happens. Today was a little bit different. We got the move and things were moving. Now, obviously, it wasn't only as a result of or the anticipation and the market collectively having enough data as to what they thought non-farm payrolls was going to be. Towards the end of Thursday, we kept seeing more and more reports that even though the expected number was going to be a specific number, a lot of analysts were expecting a little bit more. And it ended up being, in many cases, a lot more. The actual number, non-farm payrolls, was a lot more than even what analysts were expecting, which was actually more than the expected original number. So that was also encouraging. And in situations like that, we can trade basically the rumor before the news is released. That's what we're doing when we're trading a breakout that occurs on Thursday night. In this instance, it was a little bit different. There were some variations to what was going on. It was basically the same thing, but there were some things that were going on during the Asian session as well. You probably watched that if you traded the Asian session. I was watching the news and I was following along and confirming all of this. So I want to walk you through what was going on here, but keep in mind when I mentioned earlier that this week's high and this week's low was very important to me. Sometimes it has an impact, sometimes it doesn't. But in this instance, there's that dotted line again, and here is this week's high and here is this week's low down here. So when this candle broke out at 10 o'clock, the indicators were giving me the confirmation that I needed. And what was coming out of Japan also gave me the confirmation that I needed. And the Japanese yen futures earlier in the week and what was happening here also gave me the confirmation that I needed. And the dollar index as well. Dollar index was rallying during this time. The dollar, US dollar, sorry. All of that was giving me the confirmation that I need. So I knew I was headed in the right direction. The problem is, and I talked about the continuation breakout trade being accurate 90 to 95% of the time. There's still profitability in a trade like this, in this scenario, this particular scenario. There's still profitability in a trade like this, even though it doesn't hit that 55 pip take profit level. This trade on this time frame, on this particular pair, the continuation breakout trade, it is a 55 pip take profit level. But I still have to manage the trade. And in this instance, you can see how it stalled just before it ran into this week's resistance point, this week's high. That was a considerable situation for me to take into account. Whether or not I thought price was actually going to reach that resistance, or that final take profit target. So let's walk through what happened here. I'm going to open up the charts. Now, I'm going to move this. This was just a price marker. This was not my stop loss. That level right there, that is 109.00. That's the psychological level. The entry was at 20, 109.20. In a situation like this, if my 55 pip take profit level is here at 75, if there's the possibility that things are not lining up correctly and I'm not too sure it's going to hit that 55 pip take profit level, and again, why? Well, one of the reasons, again, I'm going to tighten up the charts, there's this week's high. Price does not have to hit this week's high on the number in order for it to pull away. We saw that happen earlier this week when I was trading the breakouts on Tuesday with the dollar index. The dollar index is one of the indexes that I was using to time where the market was probably going to stall and things were going to go sideways, and I was done trading for the day. So we made a lot of money trading the breakouts on Tuesday. This was similar, but this was in many ways, again, doing the same thing. It approached resistance. It doesn't have to hit resistance on the number to pull away like this. Now, I'm not saying that price is going to turn around and come all the way back down here. I have no idea. But at this point, it's done for the day as far as I'm concerned, and it's Friday, right? No, I don't want to hold through the weekend. And this is exactly what I need to anticipate, is that if price starts to approach a major resistance point, which in my opinion, again, the way I use my strategy, this week's high and this week's low, if it's significant, especially on this currency pair on this chart, then this is exactly what I would anticipate, and I'd have to manage the trade. So let's go ahead and open up again. The entry was at 20. When I'm scaling out, I take the first 20 to 25 pips, which is exactly what we did in this situation. Because again, I wasn't too sure, but as this was developing, you'll notice this is the 1 hour chart. I'm also watching the 4 hour chart. So I'm going to get rid of this price tag here. This was just where I set an alert just in case it started to slip down. Now, I was negative on this trade just to give you an idea. So people talk about what's the drawdown? What's the drawdown? How much, how many pips negative are you before price hits a target? What do you normally experience? I was minus 16 pips on the pullback. That's it. I was minus 16 pips on the pullback. That's as much negative I was on this trade before it turned around. And again, what it was doing, and this happens all the time, when there's a breakout, it's very, very common for price to turn around and come right back down and test the level that it broke out of. That's exactly what it was doing. And that's one of the things visually when you're managing these trades, you want to pay attention to that stuff. A lot of times traders will look at a pullback and they'll go, uh-oh, maybe this isn't going to work. But it's a matter of calm down, take a look at what the market is doing, not what you want it to do. Pay attention to the signals, pay attention to the clues that it's giving you. All it's doing is pulling back and retesting the level that it broke out of, and then it formed another engulfing candle, retested one more time, and then picked up momentum. It was just going to take a little more time. Every trade is going to be different. The continuation breakout trades that occurred on Tuesday, all of those paid within less than 3 hours for the most part. And that was, again, because a different situation was developing, right? News, things were different. We had some news and we had the anticipation of news, but it was going to take a little more time. We were also trading at a very more or less quiet time. We knew that until we approached the New York session, we were probably going to see this type of behavior. So, scaling out at the first 20 to 25 pips is always a good idea. That is one of the reasons why it's critical that if you use a trade copier service, you have a professional trader who is managing these trades and analyzing the data and the market just like this to determine that, hey, sometimes price doesn't move the way the market's anticipating. Most traders. And you have to have some emergency measures, right, in case, or backup procedures in case it doesn't hit the expected take profit level. What are you going to do? That's the thing. What are you going to do? There's still profitability in this trade. And you need a professional trader to manage these trades for you. If you were to set it and forget it and walk away, if I was to have set it and forget it, even though I know that this trade is accurate 90 to 95% of the time, I've been using this continuation breakout trade since 2001. I created it. I developed it. I was doing what I was doing when I created this method was trying to prevent head fakes and to also get an opportunity to trade breakouts and the trending move that develops afterwards. And I calculated that in almost every situation, 90 to 95% of the time, price, if everything else is done correctly on the entry on the signal, and I'm confirming everything correctly, price is going to hit that 55 pip take profit level. But what about that 5% of the time that it doesn't? This only went up as high as 73. My target was 75. If I would have set it and forget it and walked away, we'd be sitting here giving back quite a bit of profitability. Nobody knows that it's going to hit that target, but you have to prepare, right? You don't know what's going to happen, so it's better to scale out if you can and then manage the trade if it goes up higher. That's the advantage of using a trade copier that is managed by a professional trader. Somebody who's actually protecting your capital, because I'm protecting my capital. I'm doing the same thing in my trading account. I want to make sure that this is a lot better than just setting it and forgetting it and walking away, right? If I would have set it and forget it, what if it didn't hit 40? What if it didn't hit the first take profit level? What if it didn't do that? What if it just moved up to maybe 34, stalled and turned around and came right back down and then hit that minus 55 pip stop loss? There still would have been profitability in there. It would have been better to take 15, 16, or even 12 pips than to let it run right back down and hit the minus 55 pip stop loss. There's no reason for that. So it takes a professional trader that's going to manage it. You can't always specify the time that these trades are going to set up. No one can. But it's a matter of creating the flexibility in your trading plan that you say, okay, well, I'm only going to trade certain hours. This is another thing that I had to experience and learn to adjust as my trading career. One of the things I had to learn to accept. If I was going to continue to trade as a trader, and this is my thinking back in 2001, I knew I was going to follow the market. I couldn't make the market do what I wanted to do or set up trades when I wanted it to. The market moves in cycles. Sometimes we get more activity and more breakouts during the Asian session, and then it stops. And then sometimes we get more activity during the breakout and the breakouts during the New York session. And then sometimes it'll switch and it'll happen just like at the beginning of this week on Tuesday with those breakouts during the London session. So it's a matter of following what the market's doing and then me making my adjustments and then still having a plan in place, right? If I want to sleep 8 to 10 hours a day, well, then I'm going to have to sleep 8 to 10 hours a day when the market gives me the opportunity to sleep 8 to 10 hours a day. It's going to give me the opportunity, and then I'm going to trade these breakouts when it gives me the opportunity, whether it's the Asian, London, or New York session. I have to follow it, and I've got to manage it. So I can still keep a very structured, rigid trading plan, but there's also a certain degree of flexibility because I cannot control when the market's going to behave the way it does and do what it does. And one of the other reasons why I was able to more or less determine that it was probably not going to hit that 75 take profit level. It went up a little bit higher than I thought, to be honest. But as I said, I'm not only watching the 1 hour time frame because that's the time frame I use to get into the trade, but I'm also watching the 4 hour and the daily chart. So let's switch to the 4 hour chart. As I said, when I see a continuation breakout trade develop on the 1 hour chart, and then it all lines up. Later on, I want to look back and look at a chart, a 4 hour chart, and see that the 4 hour chart has confirmed the same continuation breakout trade. Then I know I've got more momentum, more likely that price is going to go higher in most cases. And then later at the end of the day, like I said, I would like to see a daily chart close and print a continuation breakout trade. And then it's likely that I could probably hold on to the trade a little bit longer and make even more than 55 pips in certain scenarios, certain situations. Again, not in every case, but when it sets up correctly. So let's take a look at the 4 hour chart. The 4 hour chart, this is the same resistance point. I didn't change anything. All I did was change the time frame. That candle right there closed above, giving me the signal. But again, there's this week's high right back over here. And on that candle, the Bollinger Bands were not separating the way I need them to on a continuation breakout trade, indicating to me that price was probably going to stall, and here is that resistance point, and that it may not even reach that 55 pip take profit level. So at that point, it was critical for me to be aware. Again, let me go back to the 4 hour. There's the 4 hour signal candle on the breakout, but it wasn't confirmed as a continuation breakout trade on the 4 hour chart. The indicators weren't lining up. They weren't giving me the confirmation that I needed. So I was able to step back for a moment, take a look and see what's really happening, not what I want to have happen. There's this week's resistance point. Here's where it stalled. So all of this led me to believe that I need to really pay close attention here and start managing this trade a lot more closer, because it may not hit that take profit level. This is the advantage of using a trade copier that's, again, managed and operated by a real human being, a professional trader who's doing exactly this, not some automated system that just fires off trades and does whatever it wants. Sometimes trades don't hit their final target, but there's still profitability in the trades. And if managed correctly, you can still make money. It's better to make money if you can. Some money is better than no money, right? No money is better than losing money. In other words, meaning that, let's just say it didn't do anything. For example, with this situation, the euro dollar, I didn't do anything. I could have just looked at just the euro dollar chart all by itself and not looked at any other currency pair. I was looking at many different currency pairs, as you know. As you probably already know that I do. I'm always looking for opportunities, but it doesn't mean I'm always getting an opportunity with them. I've got to wait for the right conditions and the right setup, my trade technique, to come to me. I've got to wait. It's like hunting, stalking. I've got to wait for it to happen. So in a situation like this, again, putting in 9, 10, 12 hours of watching one particular currency pair and then realizing, hey, I still don't have a trade. That's okay. It's a lot better to know and do my work, analyze the markets, put in the time, which is irreplaceable. Time is always irreplaceable. That is a huge factor when it comes to trading, successful trading. And then realizing that you don't have a trade and staying out of it. Don't execute a trade if you don't have a trade plan. If there is no trade according to your plan. That is critical. That's going to keep you in this game a lot longer than, of course, just jumping in and out because you see price spiking down, but you don't. When I saw price spiking down, I was thinking maybe we might have a continuation breakout trade. I won't know until that candle closes. That's my number one rule when looking for a continuation breakout trade. I have to wait for the candle to close. When I talked about why I developed this method, that being the first one, the continuation breakout trade back in 2001 when I went off to create my own trading system, this is what I was experiencing. This is exactly what I was talking about. This behavior right here, this consolidation range, when I first started trading, and I'll give you a little backstory on my history of trading, back in 2001, in case you haven't heard it, but I do have in the webinar I talk about it, and also on the website in a few other videos. But back in 2001, I joined a chat room, and the chat room moderators, whenever they would see consolidation range that look like this, and then all of a sudden price would spike, let's say taking out the low. As soon as it would spike and take out the low, they would immediately say, everyone sell euro dollar. And everybody in the chat room would sell euro dollar, including me. And here I was trying to make money to feed my family, take care of my family, thinking I was going to make a lot of money as a trader. Ultimately, I did, but it didn't happen, certainly in this chat room. And I was losing money hand over fist. I mean, I was losing thousands and thousands of dollars, tens of thousands of dollars in a month. I was trading standard lots, and in some cases I was trading 5 lots at least. I don't recommend doing that. I don't. I was fortunate that I had the ability to do that, but it was still a foolish mistake. I should have taken a lot more time to get to know this company and to know their track record with trading. Again, back to what the chat room moderators would do is as soon as it would take out support, let's say with the economic data, they would scream, sell euro dollar. And everybody would sell euro dollar. And what would happen in almost every situation? Price would roll right back up inside a consolidation and go sideways. And then we were negative, right? There's a lot of volatility. You don't know exactly where you're getting filled. They wouldn't say sell until it took out that low. That low right there is 1.1640. So I wouldn't get it filled until 30 or 28 or 29 or who knows what. And then price would roll right back up, and I'm now sitting here at minus 60 or 65, 70. And you're frustrated, you're down 30, 40 pips. Well, that's a big stop for a lot of people anyway if they're not really factoring in what the market and what price can do. And then I would close with another 30, 40, 50 pip loss. Times $10 a pip times 5 lots. So you can see how much money I was losing. So I was determined once I quit this chat room, and I was sick and tired of losing money with these people. They didn't know what they were doing. As it turns out, the people that were moderating this chat room and calling out trades were hired by the company that sold me a $2,000 trading course, and the $2,000 trading course was nothing more than just textbook knowledge. The same material and the same information that I was getting for free on the internet, and the same material that I was reading in books that I was borrowing from the library and buying at the bookstore. That's what that $2,000 trading course consisted of. Didn't even give me a valid trading plan. And then they upsold me on a chat room, and then they put the chat room moderators, those were the same people that had purchased the $2,000 course. So none of these people were even qualified to call out trades. So what I was doing was trying to prevent these head fakes. I call these head fakes. Everybody calls them head fakes. I didn't want to get caught up in these head fakes. I was tired of it. So I knew that, so with backtesting, I knew that I needed to wait. I found better results by waiting for the candle to close. Just by that one simple change, waiting for the candle to close and then assessing what was going on. It was a one step at a time procedure. I was scientifically testing how to build and piece together this system. It wasn't easy. I did not figure it out all in one day just because I found one candle that closed below that support level. That is not what happened. I had to figure out how to determine the right ranges of consolidation, how long should consolidation be in place, so many factors, so many things behind what I was actually doing and how I trade the continuation breakout trade. So I won't go into the details there. I'll spare you here. But again, a automated trading system isn't going to factor all of that in. It's just going to automatically just spit out a trade and execute it on your trading platform, and you end up with a loss. In this situation, in this scenario, I am managing every detail of the trade, or I will not execute it. And there are times I have to be totally honest, because it happens to every trader on the planet. Eventually, doesn't matter their level of skill, how much money they're trading, eventually they're going to see price action and behavior on the charts that they just don't understand. Doesn't make any sense to that individual. And then they know that they need to step back. That's one of my biggest advantages and why I always close every month with a profit and I don't have losing months, is that I know when to stop trading. And part of it was because I had lost so much money, I didn't want to lose any more money. I know when to stop trading. If I see something that doesn't make any sense, then I stop looking at that chart and I start looking at something else that makes more sense. I am not going to force a trade staring at a chart just because it's my favorite currency pair, but it doesn't make any sense to me. I know that I can look back and give it a few days and then come back to that chart and then it'll start making sense to me again. That's how the market moves. It moves in cycles and it's always going to give me an opportunity. It's just that right now, it's not giving me anything. Earlier in the week, it gave me continuation breakout trades and I was happy to trade it. That was back over here. The continuation breakout trade, support and resistance and things like that have moved throughout the week since I've made adjustments to the technical levels. But that was the continuation breakout trade on Tuesday. Paid 55 pips. You can see how long. 1 hour candles. Less than 3 hours, it paid 55 pips. That made sense to me. This doesn't make any sense to me. This is just confusion and consolidation. I can see that it's probably going to bounce off of resistance. Like I said, I got a Tech 1 trade. But again, with non-farm payrolls and watching more economic data, this is just consolidation. It's safer for me to wait for this. And if I don't have any trade here, I'll go look at another currency pair. So I hope that gives you some insight as to how I trade, what I'm doing. It was a great week. This was a really great week. I actually have a new addition to my family this week, so I was actually not trading for a couple of days, about a day and a half this week. So I apologize for that. New baby in our family, and but I'm back on schedule. I can't stop holding this baby. I love babies in my family. So anyway, I appreciate and I'm very grateful for a lot of the emails and support that I've received, but family's doing fine, the baby's doing fine, and it is just the most beautiful thing I've ever seen besides my children. So anyway, back to regular schedule. Next week will be a full regular schedule. Monday this week was a bank holiday. I don't trade on bank holidays. That was Memorial Day here in the United States, but next week's going to be a full trading week.